What's up guys, it's Nathan here. Why has NAB revised their forecast? Well, following an array of unexpected actions by the Reserve Bank in the preceding months, NAB has reorientated towards their initial forecast from February, suggesting that the cash rate will climb to at least 4.1%. Their estimate pegs that the peak will occur in July, albeit NAB has acknowledged that there is a possibility that the Reserve Bank most postpone this action until August of this year. NAB's February prediction was that there was a probability that the cash rate would peak at 4.1% based on three core principles. First was inflation would persist significantly above the target in the immediate future. The second was the economy would continue to demonstrate a substantial robustness. And the third is that constricted labour markets would sustain an upward swing on wage growth. And these three underpinnings remain visible. The ambiguity surrounding NAB's cash rate projection has been due to the Reserve Bank providing mixed signals in their meetings. Nevertheless, it's evident that the immediate balance between inflationary risks tilt towards the upper side. The Reserve Bank projects that inflation will revert to the upper end of their target range only until mid-2025. To avert any further delays in this timeline, at least one more rate hike will be likely required. NAB hasn't also ruled out the possibility for an extra 25 basis point increase, bringing the official cash rate to 4.35 if economic indicators remain consistently strong. Importantly, the rate projections are not a reaction to the recent federal budget. NAB perceived the budget to be relatively neutral in its inflationary impact and its implications for the monetary policy. And if you find value in this video, please consider hitting that subscribe button as it really helps out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. NAB's perspective remains that there will be a ripple effect of higher interest rates on household finances, and the broader economy will eventually precipitate a more pronounced economic deceleration in the later half of 2023 and into 2024. NAB anticipates that annual GDP growth will taper off to less than 1%, and the unemployment rate will start itching up, likely hitting 4.7% in 2024. These dynamics are set to increasingly challenge the tightrope walk that the Reserve Bank has to suppress inflation without excessively stifling the economic growth. As the economic slowdown takes root, NAB maintains that the cash rate would need to get to at least 4.1% in the short term, but then will revert back to a more neutral stance to about 3.1% by mid-2024. And the crux of the matter for the Reserve Bank is determining if they're at ease with inflation continuing to supersede the target for an additional 2 years. In a recent address, the governor confirmed their unwavering dedication to guiding inflation back to the target within a recent time frame, albeit not instantly. Yet they can't afford any undue delays, especially if it risks undermining labour market gains. If the return to target takes too long, it could recalibrate expectations and complicate matters further. For a standout point, allowing inflation to remain above target for 2 years will likely push the boundaries for what the Reserve Bank might consider a reasonable time frame. The recent Reserve Bank review recommended that the board concentrate on achieving the midpoint of the target range in inflation at 2.5%, so just reaching 3% by the end of the forecast period may be deemed unreasonable. Consequently, the cash rate would need to go higher than current levels to moderate inflation quickly, particularly if wage increases pose an unexpected surprise. As NAB expressed in February, a cash rate at 4.1% would undeniably enter into restrictive territory, which would significantly affect household cash flows. Assessing the restrictiveness of monetary policy in real time is challenging, and it is conceivable that a higher cash rate of 4.35% might be required to counterbalance inflation risks. For now, NAB anticipates that the peak cash rate will be 4.1%, mainly due to the Reserve Bank signaling its readiness to accept a slower return to target inflation. The board might opt to maintain the cash rate at 3.85%, favoring a lengthier return to target in order to preserve labour market gains and reduce the impact of higher rates on households. However, this strategy might expose the Reserve Bank to significant risks if the economy proves to be more resilient, wages to be more reactive, and services inflation to be more persistent than anticipated. An additional rate increase of 25 basis points, taking the cash rate to 4.1%, could be imminent, possibly at the next Reserve Board meeting in June, especially as we start to see new data come through. However, since April, the Reserve Bank has shown a trend towards avoiding monthly changes and gathering data over more extended periods as they fine-tune the policy restrictiveness amid heightened uncertainty. Therefore, NAB currently anticipates that there will be a pause in rate movement in June, followed by a rate hike of 25 basis points in July when the Reserve Bank has access to both Q1 WPI and national account releases, along with additional labour force and monthly CPI data and national wage case decision. The Reserve Bank might even delay further action until they get data in August, armed with the full Q2 CPI release and another round of staff updates. Remember to like, share, and subscribe to stay informed with all things property and finance. As previously mentioned, the longer the Reserve Bank waits, the more likely they'll start to see signs of decelerating activity, which might limit the momentum for rate rises. NAB are currently maintaining their position that as higher rates begin to affect households' cash flow and permeate to the broader economy, a notable slowdown will commence in the latter half of 2023, extending into 2024. The bank expects that GDP growth will dip below 1% and unemployment will climb, reaching to 4.7% in 2024. As the slowdown manifests, NAB is projecting that the cash rate will return to a more neutral level, which would potentially see the cash rate get to approximately 3% on a more normalized term. NAB anticipates that the Reserve Bank of Australia will make cuts towards this level by mid-2024. Did you know here at Hunter Galloway, we're mortgage brokers and can assist if you're wanting to navigate the home loan process. Whether you're a first homeowner, upgrading or downgrading, or even buying an investment property, we can help. We work with people right around Australia, and you can reach out with us by simply calling on 1300 088 065 or visit our website huntergalloway.com.au. You can fill in a contact form and we'll get in touch and complete a free assessment. Guys, as always, thanks for watching and we'll see you next time.